for more on this story. We actually have a special guest out there with you in the newsroom to talk about how this works, the shares changing hands.
Yeah, indeed. Carter Mack joins as CEO of JMP Group, one of the leading investment bankers here in Silicon Valley and the area writ large. You've done a lot of these deals. You've seen a lot of these deals.
Yeah.
A secondary before 180 days is up is not unheard of, but it's not common.
It's not that common, but we've seen it in the past in deals that we've been involved in just in the last year and a half. RealPage, we did a secondary that we were an underwriter on about 3-4 months after the IPO. ServiceSource, which is a very successful IPO last year, did a secondary about 4 months after the IPO. So it's not that common, but when you see fairly good stock price appreciation, you have a large overhang of venture capitalists, I think it's a good thing. I think you help get some of that overhang out of the stock.
Let's talk about that a little bit. So
Sure.
venture capitalists who've made their big money in the stock, if they didn't do a secondary,
Right.
would after 100 days be able to be out there in the market dumping
They'd
shares
be able
willy-nilly?
to distribute the shares to investors in their funds. You'd have a much sloppier distribution. The stocks...
Which would mean on any given day the stock could really get a hit when someone's pounding the shares, leading to volatility.
I mean, LinkedIn had a big decrease in their stock price after the 180-day lockup expired. It just allows a lot of shares to come on the market. You get a lot of supply in the market. It trades badly for some period of time. I think this is a really good thing for Zynga long term. I think getting some of that overhang out of the stock, doing it in an organized fashion and getting it in the hands of hopefully good long-term institutional investors, public market investors, is going to help the stock trade better. And from what I understand, there's also the ability potentially to get some of these bigger shareholders that are going to be able to sell in this offering to sign longer-term lockups.
Right, but also because they wanted to get
exactly.
out. Exactly.
I mean, there's
one of the things we saw with this IPO, and we've seen with a number of these bigger deals, is a lot of names on the right, a lot of bankers participating that weren't lead bankers in hot deals that probably got 0 shares in the IPO. Is this the reason that banks will sign on the right because they want to participate in the secondary offering?
Well, sure. I mean, I think you hope it's the start of a long-term relationship where you're going to do more offerings for the company, where you're going to, like for JMP, we always know that if we prove ourselves on the IPO, that we'll do better in the secondary share sale, that we'll get more economics on that transaction. And we usually do, because we usually sell a lot on the IPO. And
what are the pro and con? We'll start with pro, since you know, my glass is always half empty. What are the pros of a company not joining in the secondary? Because Zynga's not selling shares here. At least that's what we're hearing from sources that were close to this deal.
Well, I think if you're involved in the deal on the IPO, it's a natural to be involved in the secondary share sale.
So this is weird that they're not involved, right?
That a bunch of the co-managers
that Zynga's not involved. Sorry, Zynga's not selling any treasury shares.
Zynga probably doesn't need to raise any additional capital right now. It's, they don't feel a need to raise capital. This is a way to offer their existing shareholders a chance to get liquidity on the stock and get that overhang out of the stock. And they may feel that it's not the right price for them to share.
Interesting. Is the downside, I mean, there's the old saying in Wall Street, if the ducks are quacking, feed them. The ducks are quacking, but they're not going to join in. Is the downside they might risk an opportunity for more liquidity they might need down the road?
I don't think so. I really don't. I think this is a good corporate finance maneuver to get those shareholders the overhang out of the stock, allow the stock to trade better over the longer term. And if Zynga wants to raise additional capital, I'm sure there'll be an opportunity down the road.
Indeed. All right. Carter Mack, JMP Group, glad to get you here and get your insight in a day when this story can be an interesting one. Indeed.
Thank you.
Emily?